No.
The 5 pillars of financial stability. Area of concern number 1 is what's called the area of debt. So Nick, question. Would you say most families in America today are in debt or out of debt?
In debt.
Most families are in debt?
Yes.
Patty, what's your take?
I agree.
Okay. So let's suppose most families, by the way, you're correct, most families in America are in debt. Would you say the debt they're in is under control or out of control? For most families in America.
Probably out of control.
So for most families have debt that's out of control, right?
Yes.
What's the definition to out of control debt? Do you know?
Where I would say you get disturbing phone calls and now you can't sleep and the interest is out of control and you just can't, it's a fire like a wildfire.
Okay, so high stress, high
Yes,
anxiety, a lot of pressure.
Yes.
All right, that's out of control debt?
Yes.
Okay, I would agree with that.
First thing comes to mind is student loans. When you say out of control debt, it's the first thing I think of.
So it's out of control debt?
Yes.
Okay. Both of you guys are correct, and then there's one more on top of that, I would say. Out of control debt is debt that you don't have a definite payoff date. Example, let's suppose you go to a car dealership and you buy a car, and you go get a 4-year loan, a 5-year loan, and you make payments every month. When's your car paid off if you got a 5-year loan?
In 5 years.
In 5 years. So you have a definite payoff date, right?
Yes.
Well, what if you have, say, $30,000 worth of credit cards, and you have 6-7 different cards with $30,000 balances that total all to those cards? You have various interest rates, 19%, 25%, 22%. You make minimum payments. Can you tell me when your debt's going to be paid off?
No.
So by definition, that is out of control debt.
Correct.
So you don't know when that debt's going to be taken off. So we're in business with a company called Debt America, where we help families get out of debt. We accelerate the pace at which they get out of debt. So you sign up with our company, and if they qualify you, most people do qualify through typically a financial hardship. So benefit number 1 is they're going to be able to lower your balance on your debt by some 50%. So let's suppose you owe $30,000 worth of debt. All of a sudden it drops down to about $15,000. So half of your debt is forgiven. Kind of like if you're a Catholic, you know, half of your sins are washed away. Sound good? Sound good so far?
Yes.
All right. Benefit number 2 is we're going to be able to lower your interest rate on your existing debt to a bare minimum, maybe 3 or 4%, or in some cases we're going to be able to zero it out completely. So can you imagine you have, say, average of, say, 20% interest rate on your credit cards, and they negotiate to drop that down to 0, so therefore all future payments go directly to principal. Sound pretty exciting?
That sounds great.
And then benefit number 3, we're going to be able to lower your monthly payment. Say your monthly payment is $700 a month, all of a sudden it's like $250. Would that work out? Okay, so these are 3 benefits we offer to families that are serious about getting out of debt, because living in debt is a tough proposition. So is there any debt on your plate right now that we can help you with?
Your student loans.
You have some student loans? Okay,
Yes.
Other than student loans, any other credit card debt, medical bills, any uncollateralized debt? Okay, well, good. Can't necessarily, I don't know that we can do something about student loans, but before I leave, I'm going to gather your information to let them know, to let Debt America know that you have a student loan issue, see if there's anything that they can do. I'm not clear that they can, but if they can, they will. Fair enough?
Yes.
Okay, area of concern number 2. Second pillar is we are in the business of teaching families how to buy life insurance. So, Nick, let me ask you a question. Has anyone ever taught you how to buy life insurance?
No.
Patty?
No.
No one's ever, your parents?
No.
High school?
No.
Did you go to college?
Yes.
When you guys went to college, did you ever take a personal finance course that talked about the concept of life insurance?
No.
What about your employer at work? You guys have human resources and personnel?
Yes.
As like, you know, Betty that works in human resources, has she ever taken the time to educate you on how to buy life insurance?
No.
What about Google? You know how Google has the answer to everything?
It does.
Has Google ever taught you on how to buy life insurance?
No.
Interesting, huh? So nobody in your entire life, all the dealings you've ever had with people, no one's ever educated you on a very important topic.
No.
So Nick, let's get right to the point. How old are you?
37.
37. And what kind of money are you pulling in per year?
90,000.
You make $90,000 a year?
Yeah.
Okay, awesome. What do you got going right now for life insurance?
I think my work does like 50,000 for each employee.
your job?
Yes.
So you have life insurance at your job?
Yes.
Okay, and that you said is $50,000?
I think so.
Okay. And do you make a payment for that $50,000 worth of insurance at your job?
Possibly. I don't really know too much about it.
You don't. So possibly you may or may not.
I think maybe like $25.
Okay, so let's just say, let's suppose you pay $25 a month for your $50,000 of group term. Does that sound familiar?
I think so.
Group term?
Yes.
Okay. Outside of that $50,000 life insurance policy at your job, do you have any other life insurance that you own?
No.
So that's it.
That's it.
So, Nick, if something were to happen to you, your wife and kids receive a check for $50,000, that's it.
Yes.
How long before they run out of that money?
Should be enough to marry me.
Okay. And then a little bit after that?
Maybe.
Okay. You realize your current position right now?
No.
Do you feel you're adequately insured, underinsured, or you're grossly underinsured?
The way you're explaining it makes me feel like I'm underinsured.
Okay, well let me give you a little concept. Just let me flip the page here for a little bit. Nick, your age 37, you said?
Yes.
When do you plan to retire? What age?
60 would be great.
Okay, so let's suppose you go from age 37 to age 60. Give me a number of years. Count from 37 to 60 is how many years?
33 years.
33 years,
23
right?
years.
23?
Yes.
Is that correct?
Yes.
So 23 years. So let's take 23 years, and every year you make $90,000. Is that correct?
Yes.
Give me the math on that. What's 90,000 times 23? Somebody give me the math on that.
It's 200.
23 years times.
$2,070,000.
So $2,070,000. So Nick, let's just do the math. This is very common sense, basic math. Over the next 23 years of your life, you make $90,000 per year. You don't get a dollar of raise. You just make $90,000 every year. Over the next 23 years, you're getting ready to bring home to your family $2,070,000. Correct?
Yes.
That's if you live and you work. But if you die, your family's going to get $50,000. How you feeling about that?
Like shit.
Okay, Patty?
I'm not happy.
Did you know that, by the way?
No, actually, that's very disturbing now that I see
Okay,
it.
so by the way, does this make sense?
Yes.
If he just continues to make the same amount of money every single year from now to age 60, he's getting ready to bring home to this household over the course of the next 23 years $2,070,000 if he lives. But if he dies, this is not coming in, this is coming in, $50,000. So question for you, Patty, would you be able to keep the house, this house right here, if without his income?
In 60 days, I'll be in trouble.
You'd be in trouble, okay? Nick, how you feeling about that?
Said not
Okay,
good.
so let me just say, for most families that we meet with, they are grossly underinsured. And it seems like this is a perfect case. And by the way, you're healthy, right?
I am.
Do you smoke?
No.
Okay. Any medical issues?
No.
So chances are you would qualify for a solid policy to protect your family.
I would like to
On a
think so.
scale of 1 to 10, Nick, how important would be protecting your family to you?
It's a 10.
A 10? 10 out of 10?
Yes.
Up until this point or even before then?
Before then, I mean,
Okay.
that's what I work for.
And no one's talked to you about this before?
No.
Not even Google?
No.
Okay. Patty, what do you got going? How old are you?
37.
37. And what do you got going? What's your annual income?
Oh, I stay home with the children.
Okay, so your income is 0?
Yes.
Sugar mama.
Her income is 0, so that means this household runs strictly on his income.
Yes.
And if he's gone, you get a check for $50,000.
Yes.
And then you have to bury him, and the rest you're going to live on until you get a job.
Yeah.
What are your thoughts?
That you can't leave this house until you help us.
I'm glad you said that because I'm prepared to do so. What do you got going for life insurance yourself, Patty?
Nothing. I stay home.
You have 0 life insurance yourself. So what's the value that your wife brings to your life from an economic standpoint?
Takes care of everything at the house. Takes care of the kids.
What's the value of that? How much would that be worth?
Priceless.
If you had to hire someone to clean your house, take care of the kids, do the grocery shopping, do the laundry, what would that be? What would that cost you per month?
Oh man, I actually don't know. I never even looked into.
Say maybe 3,000,
Sure.
maybe 4,000. Okay, so
What should you be making a month?
okay,
You need to be giving me 5,000.
okay. So let's say 5,000. So her value to this household is $5,000 a month. So if something happens to her, now you have value of $5,000 that you're going to be missing. So she needs to be insured as well.
Okay.
You with me?
Yes.
All right, so that's the first area. One question, and I'm glad your wife said that, Nick. I have a license issued by the state of California Department of Insurance to help families in your situation. And obviously I walk into your house and we've discovered a huge void, a huge need. So straight up, Nick, my question to you is, should I leave your house and you remain with this scenario? Or should I leave your house and I leave you appropriately covered?
Take the latter part of that.
You can't leave until you help us.
Okay, good. I just want to make sure we're all on the same page, which I really would insist that you guys take care of this, because this could be something that you will heavily regret. Next area of concern is we help families prepare for retirement. Nick, direct to the question, what do you got going for retirement right now?
I think we have like 150,000 in a 401k through the work.
Okay, so you have $150,000 in a 401k?
Mm-hmm.
Okay. Do you make monthly contributions to that 401k?
Yes.
How much a month out of your check goes in there? Give me a dollar amount, not a percentage.
200.
So $200 of your money goes into that account?
Yes.
Do you receive a match?
No.
So no match?
No.
So you put in $200 every single month and your company doesn't match you?
No.
Okay. On a scale of 1 to 10, Nick, here's that question one more time. Scale of 1 to 10, 10 being best, how well would you say you understand how your 401k works?
Let's call it a 5.
A 5?
Yes.
Do you normally make financial decisions with a level 5 understanding out of 10?
When you put it that way, no.
Okay. Because this is a level 5 and you're putting $200 a month away into something you understand half of?
Yes.
Doesn't make a lot of sense, right?
No.
All right, so before I leave here, I'm gonna educate you on what's happening here. This is not as good as you think it is. I know you're led to believe that this is the greatest thing since sliced bread or handmade tortillas, and it's not.
Okay.
Just want you to know. Other than this 401k, what else you got going for retirement?
That's it.
That's it. And Patty, what do you got going for retirement?
I don't know.
0? Okay. And how you feeling about that?
Pretty gross out about everything.
Okay. About everything? All right. And you guys want to do something about it to improve your financial situation?
Absolutely.
Didn't it feel like initially you were kind of doing Matt sort of like a favor?
Yes.
And it kind of turned around like all of a sudden he's doing you guys a favor. Didn't it feel that way?
It does.
That's pretty cool. I've been doing this business for many years. This is what we do to help families. Is one, we get clear on where you're at, what's good, what's not so good, and then we help you improve it if you want to. And it looks like we ought to, right?
Yes.
Area of concern number 4 is we help families prepare for their children's college education. What do you got going? How many kids you have?
You have 2 kids.
2 kids. What's the oldest? What's the name? Bobby. Thank
Yeah.
you. And how old is Bobby?
9.
9. And what's the name of your second? Susie?
Susie.
Okay. How old is Susie?
4.
4. All right. So direct question for both of you guys. Is it your intent that you want them to go get a college education?
Absolutely.
Okay, Patty, is that the case?
Yes.
You're very serious that you want your kids to go get a college education? All right. So what do you got going in Bobby's college education plan? Nick?
Nothing.
No.
Oh, we do? What?
No.
Nothing.
So 0.
0.
So a second ago, you guys said you guys are very serious about them getting a college education, yet you guys have done nothing about it. Is that correct?
Yes.
What about Susie? What does she got going for college education? Nothing. So you guys are really serious, but you've done nothing about it.
Honestly, it's just we didn't know. We've never sat with anyone. So no one's given us a class like this. You know, in fact, I want to ask you a question. Why is it that farmers never offered me life insurance? They sell insurance. Why didn't they offer me that?
Have you ever called your guy?
Well, we pay. I mean, once a year they call us.
You've not called him?
No.
Don't. I'm here.
Okay. Okay.
Cool.
Thank you.
All right. Well, we're in business to help you with all these areas.
Okay.
And by the way, your question is valid. Lets you know how many, you ought to be wondering how many other people like you are in the same scenario.
Good.
Chances are your neighbors, your family members, your co-workers, all the people around you are in the same scenario.
Right.
If we were to do a survey of the 100 people you know, for example, their situation would look about like yours. might look different on the outside, but on the inside, this is exactly what's happening. All right, the last thing we do is we help families prepare what's called an emergency fund. And an emergency fund is the following. We help families put away, help them save 3 to 6 months of their income in an emergency fund. So in case that you know what hits the fan, Patty, in case he gets laid off, he's hurt, he's disabled, in case there's some interruption of income, you guys are going to go to this account to pull out 1 or 2 or 3 months of his income to tide you over, so therefore you don't go into collections, defaults, repossessions, bankruptcy, all those nasty words. Do you guys have an emergency fund?
We only have enough to cover a month.
So you do have,
Yes.
what, you got like 7 grand, 8
Yes,
grand?
that's
How
it.
much?
Just a month worth, like 10,000.
So you have $10,000, is that like in your bank account?
Yes.
Is it considered like an emergency fund?
Yes.
Okay, very good. Well, we're done. Let me show you guys where we're at. Let's review this. Your debt situation looks to be okay other than your student loans, which I'm gonna follow up to see if we can help you with that. Your life insurance position is in huge need of improvement. Patty, you have 0 life insurance, and Nick, you have $50,000 at your job. Let me sort of add insult to injury. That $50,000 is only good while you work there. So the question is, do you plan to be a lifelong employee?
No.
No. So the day you leave, that $50,000 is also gone. Can you believe that?
Sucks.
The third area of concern here would be your retirement account. Obviously, that $150,000 in your 401k. I'm going to take a couple of seconds to educate you a little bit more on that, but I want to do things that in order. We're going to talk about this after we've handled this, because this is obviously takes precedence over this one. Your college education plans for your kids, because you guys are so serious about your kids going to college, but you've done nothing about it. So we certainly need to start that, because your kids are only getting older every year. And not to mention, you guys need to beef up your emergency fund. After everything you've seen so far, if we were to help you improve your overall financial position, where do you think we ought to start, Nick?
Kids' college education.
We ought to start with your kids' college
I
education?
don't think so, sweetheart. I think we need to start a life insurance. If you go, what am I going to do?
Okay.
Nick, you agree with that?
You heard her.
She's actually right. Life insurance is the foundation of a family's financial plan. If you have this, all of these can go. If you don't have this, none of these go. What I mean go is actually grow in value. You with me?
Yes.
Because income is the one thing that feeds this and feeds this and feeds this. Is that right?
Yes.
But if your income is gone and you don't have life insurance, then you can't feed what you don't have. Make sense?
Yes.
Let me show you your specific numbers, and I'm going to teach you a little bit about life insurance. I'm going to teach you the 2 different options. There's a thing called term. There's a thing called permanent. I'm going to educate you on both of those. And I'm going to give you your specific numbers and her specific numbers. And let's figure out per month how much can you guys comfortably commit to making sure we take care of this item tonight. Fair enough?
Yes.
Okay. Pull out my laptop. Go from there.
Oh, you said term versus perm.
Term versus
And
perm
I'm
after
hungry,
that?
so
Yeah,
presentation
term
over.
versus term after that. I took a bacon now as much as I possibly could, baby.
Boom.